You seem to be among those who say, look, President Trump can't really afford to jeopardize the trade deal going into the election. But if the U.S. continues to go hard on these issues of human rights, on their concerns about the national security bill in Hong Kong, will China renege on their commitments in the trade deal?
Well, they can always negotiate a trade deal that's going to be acceptable to both sides, and they can whitewash it by saying that it's a win-win for both for China and the U.S. And I think Trump is, at this point, likely to do that just because he's backed himself into a corner. He's been talking about this for a while. But I don't think that's the main issue here. The main issue is I think the Chinese have basically written off chances of trade going back to the good old days of autos and everything going back and forth with no disruptions. I think China has moved on, and clearly the fact that they pulled the nuclear option by intervening in Hong Kong affairs showed that they are less concerned about the U.S. than they were before, and Pompeo's reaction yesterday is evidence of that.
If the U.S. were to revoke Hong Kong's special economic status, if we were to go in that direction, if the Hong Kong economy were to see a double whammy from that, of course, it's already been hurt by the COVID-19 pandemic, what do you see to be the future for Hong Kong as an investment hub, as a financial center in this part of the world?
Well, I'm very concerned. I mean, I've been here for 12 years, and I'm probably going to be here for another 10, and I'm getting very nervous about the whole situation. The nuclear option has been pulled on both by the U.S., although they haven't certified the Pompeo statement yet, and by Xi Jinping. I think that Hong Kong is not going to disappear overnight as a financial center, but clearly investors are going to be nervous about writing contracts here. Some of the larger investment funds are going to face pressure from the retirement funds about why they're continuing to invest in Hong Kong and do business in Hong Kong, given the declining rule of law here. And Shenzhen will continue to make a land grab for some of the yuan trading and some of the inward and outward flows. So I think over the next 5 years, you're going to see a gradual erosion of Hong Kong's place as a financial center.
And Andrew, would you be recommending to clients to make changes in their portfolio accordingly based on what is taking place in Hong Kong and also what you said based on the tensions with the U.S. and China?
Yes. I mean, I think Hong Kong is a very risky place to do business. You may have these dead cat bounces. You may see some people say, well, gee, it's not so bad. But clearly, if the mainland authorities come in and have to have draconian methods for stopping the protests, that's going to be very bad optics globally for Hong Kong. And investors are not going to be comfortable in that situation. Will they pull out of China? I don't think so, because the domestic market is extremely important, and everybody knows that China is the way China is. But so the question in China is whether you have a blow-up in the financial and economic system. But I think for Hong Kong, I would recommend a great deal of caution.